Welcome, 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 everybody. It's another easy algo training. And in this training, we are focusing on Indicator X, but not just Indicator X. We're going to be talking about the methodology around Indicator X. Because even though Indicator X is a very unique price action tool, the methodology that is around it is a methodology that will work for any trading style that you're using. Because it's the raw bones of how the market works, how you can interpret the markets, and the better your ability is to interpret the conditions of the market, the easier it is going to be for you to get into winning trades. So the number one skill is understanding how to interpret the conditions of the market. And in simple terms, we like to call this round trips, how to identify a round trip on specific time frames. So every time frame that you trade, there's going to be round trips. But mainly we want to focus on the higher time frame round trips. And a round trip is showing you when the market goes into a bullish trend and when it stops and goes into a bearish trend. It's a round trip from where it goes from the buyers leading to the sellers leading. More demand in the market to being more supply in the market. It's almost like a tippling point where there's a certain amount of buyers over the sellers or sellers over the buyers. And when that tippling point tips, we get a change in the round trip. But this round trip is usually directed by the market makers, by the guys who trade in the market with the biggest amounts of positions, the biggest money. These are the money movers. And they decide when these round trips happen and when they change around. So being able to understand and interpret when we notice this happening in the market is going to help you considerably in understanding which direction is the market moving in. The market has a flow, it has a movement. And by understanding how to interpret that flow and that movement, we trade in alignment with it. So round trips is a very important understanding that will really help you, because then when you look at the charts again, you're looking at it with these eyes of seeing where is it within its trip. Has it completed its trip? And I'm going to show you a few different ways today to be able to interpret a round trip, when it starts, when it ends. And there's one thing that I've been backtesting and practicing, and it's also based on this new indicator. If you guys are looking now, this is the new indicator that I'm working on, and it's actually designed to help you understand when round trips occur in the markets. Nothing is 100%, but this is very, very accurate in being able to understand when that occurs. And I'm going to be going into details of how it works, how you can use it, and how you can also identify it without even using the indicator, because it's a very basic indicator actually, but it helps you to understand when this round trips starts and when they complete from one trend side, bullish trending to bearish trending, or from bearish to bullish trending. So being skilled at understanding these market conditions and specifically round trips is really going to help you a lot. I believe it's going to help you. The core challenge I've noticed in so many traders is understanding the movement of the market, the bias of the market, the direction of the market. And that's step number one. And this usually happens on the higher time frames. So if we can understand what's happening on the higher time frames, it kind of like there's a domino effect that ripples down, that it affects everything on the lower time frame. So we want to plan and execute our lower time frame entries with what movement and direction is happening on the higher time frames. If we can align that sort of timing, then we're going to be going with the flow of the markets. And this is where we're going to open up to very good trading styles. So the key is understanding these trend round trips. Right? A trend will not end on any given time frame until the higher time frame completes a round trip in trading mass. Understanding the higher time frames, mindset, positioning, and round trip transaction speed. So when you truly understand it, can help you become a confident trader, because you're always going to be trading in alignment with the movement of the market and not against the flow of the market. And this might require you to have a lot more patience, because you're basically watching market conditions. You as a trader, the number one skill as a trader is understanding conditions of the market and being patient enough to wait for the best conditions to arise, and being able to interpret when the best conditions aren't there. So looking at the market and being able to notice this is not good conditions to trade in, and then being patient enough to wait for the good conditions to arise. And when the good conditions arise, and then you can notice it and then recognize and feel confident now that you can execute into the market without having any apprehension, without having any fear, because you know the quality conditions have arrived. But that requires some skill, to being able to interpret the data from the market and being able to understand how to know when there's quality conditions and not, and then when to stay out of the market and when to get in the market. And it's just based on observation and practice. So understanding the conditions of the market, we've got amazing indicators that help with this. And the better you understand the indicators, the more you'll be able to understand what the market is telling you. So the new indicator that I'm going to be sharing with you today, it's called Imbalance X, and it's designed to notice imbalances in the markets or inefficiencies or fair value gaps. This is how you can interpret a round trip, whether the market is starting a round trip, whether the market is completing a round trip, is we're going to look for these imbalances, inefficiencies, or fair value gaps. There's many different meanings for it, but we're going to notice it happening on the higher time frames. This can be a very, very good telltale sign that the round trip is starting or the round trip is ending. Then once we use that, we can also use Trend X, which is going to be our companion tool, just to give us a little bit more insight into that trend direction. Trend X is an amazing tool as well. And remember, we are going to be stacking a lot of these layered on top of each other, one indicator with another indicator, for us to help us interpret and really get like quality information of what's happening in the market. And then we use Indicator X for our entries. Indicator X is definitely one of the best tools to get precise entries. So understanding which tool is best in which scenario, because our trading style happens in different phases. First, we have to observe the market, notice the market conditions, and then make a decision of the direction of the market. Once we understand whether it's long or short, whether it's bullish or bearish, then we can use tools for confirmations, which is Trend X is a great tool for that. And then we can use Indicator X for our entries based on this strategy. Now, things are evolving a lot. I backtest all the time. I practice all the time. And when I find better ways of doing things that I think is more simple and can be beneficial, because I also pay attention in the group and I see where people are finding challenges. And I notice the overarching challenges and then finding solutions based on our strategies and what can help and make things easier for you. And this is where this was birthed. So Imbalance X is an indicator that's designed to detect imbalances in the market. You can see we've got these imbalances. And what imbalances mean, there's many different words. They use fair value gaps because it's gaps in the market. There's separations in the market. So when there's the separation happening within the candles, this is when the indicator will come in and it'll draw a line, and then it will depict a green dot either for longs or a red dot for shorts. And this gap separation is what's a very strong clue to let us know when there's more buyers or sellers coming into the market. If we see gap separation happening on a very higher time frame, that can show us the conclusion of a round trip or the start of a round trip from one phase to the other, from the bullish trend stopping into a bearish trend, or a bearish trend stopping into a bullish trend. So when we notice these fair value gaps, all these imbalances, all these candle separations happening on higher time frames, this can be a very strong signal to us that the round trip is starting or ending. And usually how it works is, this indicator is very simple. You can mark it by hand. A lot of people understand already how to mark out fair value gaps, but this just makes it quite easy and quite nice visually. So if you get 3 candles, you can see candle 1, candle 2, candle 3, and then you can see the wick goes up to this part over here, and then on candle 3, the wick only goes over here. And then we've got this big space in between the candle. This is what we call a fair value gap, or an imbalance, or an inefficiency. It's showing us now there's a tippling point happening in the market from one direction to the other. So say, for instance, the market was in a downtrend and was just going down and down and down, and then we suddenly got this bullish imbalance occur. This is showing us now that all of a sudden there's an injection of either new money into the market, or there's the tippling point from the bears, from people selling, to now there's more people buying, because it's that shift from the demand to the supply, or the supply to the demand, that lets us determine what is the direction of the trend. If all of a sudden there's supply in the market, so people are just selling, and then all of a sudden 50% of those people who are selling start buying, and then 60%, 70%. Now the trend is actually shifting, because more people are buying than they are selling. So this tool just helps you notice that. And if you don't know much about imbalances, definitely also look more into it, make it more part of your trading strategy, because I think it's something that will very much help you. And there's many different ways to use it. We can use it to find shifts in market conditions from one trend to another, and we can use it to find entry and exit points. So we can enter on fair value gaps, and we can exit on fair value gaps. So they tie in, because the market likes to complete a cycle from liquidity to liquidity. So in its most core sense, this is just showing us where liquidity in the market has increased considerably when we get this candle separation that starts to occur. Here's more examples of what it looks like. You find imbalances, gaps in price. They're very easy to notice. Just start back testing and testing it out and practicing and seeing if you can find them, because you've got to train your eye to notice these things and practice them, and then you'll be able to see them and notice them very, very easily. But you'll see whenever there's a space between the wick to the wick on the third candle, so it works in 3 candles: first candle, second candle, third candle, and the space between those wicks from candle 1 and candle 3 becomes the imbalance. And you can see they're very easy to mark out. I marked these out for years and years, and now there's so many indicators you can use. But there was never one that was based on kind of like an EMA or a trend direction. And that's where I decided to actually build that. But let me take you onto the charts now, and let me show you exactly how this works and how the strategy is that we can actually use to help us understand, interpret this process. So for round trips, you can see here using the indicator. And remember, guys, all this indicator doing is noticing when we've got these fair market value gaps happening, one happening over there, one happening over here. They're easy to detect. And I'm on quite a high time frame, on a 2-day, just to illustrate this to you, because the higher the time frame we can notice this on. Remember, whatever happens on the higher time frames ripples down into the lower time frames. So the higher time frame is your guide. It is letting you know what is going on, what is happening on the lower time frame. So you always want to trade in alignment with the higher time frame. So oftentimes I will go into a weekly chart, a daily chart, a 2-day, a 3-day, and I'll just look at the higher time frames first, the 12-hour, because remember, the first step is understanding how to interpret the conditions of the markets. And the true conditions of the markets are interpreted through the higher time frame, because the higher time frame represents your very high level traders who trade with large position sizes. So the big players in the market makers, the ones who are actually moving the market, they operate on the higher time frames because they operate with such huge position sizes. So that is why if we want to get a lot of accurate data, we have to go onto the higher time frame and learn how to interpret what is actually happening on the higher time frame. So you can see here, just by using this indicator and just by understanding imbalances, fair value gaps or inefficiencies, you can see that we had a major efficiency happen over here. And then this was our bullish inefficiency. And then it kept going. And the next time we got a bearish inefficiency was over here. So this is showing us a round trip. Can you see? It's starting over here at the first inefficiency, and then it's ending at the bearish inefficiency. And then it ends over here again. So round trips don't have to be too big or too small. I mean, we never really know. The only thing we can do is interpret when they do occur. So we're looking for them, and they signify to us. You can see, look at this massive candle. You can see this massive candle is showing us now that all of a sudden there's a large amount of supply that's entering the market. You can see over here when we got this big bullish candle over here, it's showing us that there's large amounts of buyers stepping into the market, large amounts of sellers stepping into the market, large amount of buyers stepping in, large amount of sellers stepping in. Because essentially that's what these fair value gaps represent. They represent this tippling point. Now there's more of one side of the market stepping in. So they mark those out on your chart, and you can mark them out yourself. It's always good to learn how to do it yourself and understand, exactly why these things are so beneficial, and then being able to interpret. So this is, I would say, the first thing that you want to be able to be good at is understanding the direction of the market. And we can also use Trendex. So on the higher time frame, if we're just focusing on understanding the conditions of the market, we can use Trendex on a higher time frame. You can see over here. Hold on, I just want to move this to here. There you go. So you can see over here, we were in a downtrend from the short position, and we were underneath the monthly pivot grid over here. Just other ways to give you more confirmation. I'm going to be going a little bit deeper now into how we can use all these little things. Because remember, once we understand the conditions of the market and we get evidence, we're like detectives. We're looking for evidence. We're looking for more information to give us more confidence about our decision in the market. And by using these tools, guys, we have the most amazing tools. Easy Algo, honestly, there's no better tools that you can use in the market. I can 100% tell you that. I've looked at every single indicator. I've tried them all. These are price action indicators, all of them. Even this new one I've created, it's a price action indicator. Trend X is price action, indicator X is price action. Price action indicators are the real indicators because there's no lag. It's just working off of what's happening in price action in the market. And this is where you're going to get a lot of accurate data. So the round trip starts from imbalance to imbalance, and then they happen on different time frames. So the main round trips are going to happen on a higher time frame. This is what's going to let you know. This is what's going to give you the overall understanding of what's happening on the higher time frame conditions. And then it'll ripple out. So there'll be difference if you go into different time frames. Like you'll see, if we go into an 8-hour time frame, there's going to be different round trips that are happening on the 8-hour. But remember, we always want to go with the highest time frame first. So depending on what time frames you like to trade, I always recommend starting with a higher time frame. The indicator X strategy, I like using a 12-hour to make my final decisions, but I always like to check the higher time frames first. Always like to have a look. And you can see by looking at the higher time frames here, we're on a weekly chart. This gives us so much understanding of what is happening based on these fair value gaps happening in the market. I'll show you over here. So look at this over here. I'm gonna take you through. Actually, wait. I'm gonna stick with something first that I had planned. I'll show you this afterwards. So here we go. So I'm just going to stick with the 2-day over here, just for the example, because remember, I want to start on a very higher time frame. Once we understand the higher time frame, we can move to a little bit of a lower time frame, and then we can conclude is everything still matching up, and then we can go to our entry time frame. So in this example, I've got 2 different time frames here, and I'm using, just in this example, I'm using the 2-day here, but you could also use a daily, a 12-hour. The 2-day just look very nice with the fair value gaps, just very nice, obvious ones that are showing these big interjections of money, big sales, big buys, big sells kind of happening. And that is just want to illustrate to you the point of how this is actually working. So then if we come over here onto, I'm just going to use these 2 time frames to illustrate the point. I've got the higher time frame 2-day here, and I've got the 1 hour over here. And then what I'm going to do is I'm going to mark off every time we get the fair value gap happening. I'm going to mark a line here. I'm going to make it red when it's showing a downtrend. And then I'm going to make it green when it's showing the uptrend. I've already actually marked them on the chart here. So I did this before, and just to save a lot of time. So we marked over here, every time there was a downtrend, we can see the downtrend over here, even if we go into the daily. So I'll go into the daily even, you can see, okay, so let us start right over here. So you can see this was the exact level where we had this bearish fair value gap happening. And this imbalance X software gave us a red dot. So once we get the red dot is just showing us that it's the third candle close. If the third candle closes underneath, this is also just another confirmation showing us that it is in fact a confirmed imbalance. And you can see I've marked it out on this level here. So what I've got over here is I've got indicator X. Over here, I'm simply only going by imbalances, and I'm waiting for that round trip to change from buy imbalance to sell imbalance. I noticed the sell imbalance occur over here, and I drew the line over here. So then I can put full screen. I don't need to look at that anymore because I know at this point, because remember, guys, a big part of trading is keeping things simple, not having too many things going on at once. Even though we do have a lot of indicators, we don't have to have them all on the chart at the same time. It's so important to learn to keep your chart clean and be clutter-free, because even though you don't realize it, but too much going on can inhibit your ability to make clear decisions, and it can create confusion. So even though we're using a lot of indicators, it's important to keep your chart as clean as possible. You can see my chart looks super clean. If I want, I can add another indicator just now, but I don't leave it on the chart. I just overlay it and I take it off because I'm just using it as a extra confluence or confirmation to feel confident about the decision that you're actually making. So at this point over here, this is where we got the sell imbalance happening on the daily time frame. It was also happening on the 2-day. You can see, if I just show you back here, it started on the 1-day over here. And the 1-day is quite a nice one to go for. You could even go for a 12-hour, but I always start in my back testing recently. I'm always started on the higher time frame. If we get that occur, then we know that cool, this could be the time that the round trip has changed over here, complete round trip shift. And then that becomes a centerpiece to mark, and then to know, okay, if this is the shift in the round trip, that means now that the market conditions could be changing, and now we could be expecting a bearish trend starting to occur. So then we come over here onto our charts, and I've just put indicator X, and I've just got the 1 hour. So I'm just using this to show you how we can use this to interpret the movement and how we can go from higher time frame down to lower time frames, because I think a lot of people find the time frame analysis a little bit challenging. But first, always start on the higher time frame, and then come to another little lower time frame, and then we can go to the entry time frame. So what I've done over here is, just for illustration today, I'm going to use 3 time frames because I just want to illustrate how it works. This can be our entry time frame over here. This can be our mid-entry, and this can be our higher time frame. Just want to show you guys and illustrate a point, but essentially you only need 2 time frames, but just want to show you this succession of how we can take very high time frame into a mid time frame, into a lower time frame, and we can stay along the line. We can make it this smooth transition that goes in alignment with the higher time frame. So it's this wave. Remember, the higher time frame is this big wave, and then we want to catch the wave. So we want to make sure we understand what is that wave doing. So when we catch it, we can easily flow with the wave. So you can see now I've turned on indicator X, and as you know, guys, with indicator X, we're looking for our short entries. Our short entries are always going to happen above the value line. So remember, at this point here, this was the critical point where we understood the possibility of a round trip shifting and changing on a higher time frame. With that in mind, then we can move our bias to more of a bearish bias. We can understand now a round trip can let us know that a new trend is starting, and with a new trend starting, we can adapt a new bias. So now we have a downtrend bias, we have a bearish bias, and then what we're looking for on this bias. Now remember, this is the same no matter what time frame you're trading. It's the same process. The only thing that would change is actually the time frames, but it's the exact same process. So with indicator X over here, we're looking for our short entries when price is above the value lines. As you know, guys, these value lines are very important levels because they show you where true value exists in the market. And true value is basically showing us where the buyers and the sellers have become neutral in the market. So anything that happens around that gives us more information, and we want to look for our short positions above value, and long positions below value. But since this is a bearish round trip that's starting, we only want to enter our short positions when price is above the value line. And you can see every time price was above value would have been a fantastic entry, above value, above value, above value. So, I mean, depending on your trading style, if you are a swing trader, mini swing trader, or a scalper, it all works the same. The only difference is the time frame that you enter on. I'm on a 1 hour now. If you were a swing trader, you would enter on the 1 hour. If you're a scalper, you're going to enter on the 5 or 15 minutes. But your higher time frame bias is still going to be based on the higher time frames. So it all depends on what kind of trader you are, what kind of style you like to trade, but the entry points are going to be the same. The only difference is going to be the time frame that you enter on. So a 1 hour time frame is going to be fantastic for a mini swing trader, for a swing trader, because you'll see you would have caught these massive swings. At this point was the conclusion, the start of the new round trip. If you had entered over here, this would have been pretty much your best entries. And you can see, like if we're using other principles as well, you can see we've got breaks and structures happening over here. Breaks and structures, when breaks and structures happen, it leaves behind supply zones. And you can see this is in a supply zone, drops, taps back into supply, drops. But all while it is above the value line when we're looking for these short positions. And you can see, look how many great entries you would have got. Above value, above value, above value. They would have been fantastic. You might have been tricked into taking this one, but you might have got stopped out. It's okay, because the majority of the trades worked in our favor. Look how many successful trades you would have taken. Even over here, if you'd entered over here, you could have still traded down to this position, at least to value, and then we get the shift happening. And now right here, see where I drew this green line? This is the end of the bearish round trip. So right now, guys, look where Bitcoin is. We are starting a new round trip on the fair value gap. So this is pretty exciting, and I'm very excited to test out this new strategy and these new revelations and understandings and see how they play out, because there's so many clues showing us the shift in transition now in the market, and I'm going to show you all the other little pieces that I've also discovered. So another confirmation we can use, as you know, guys, we use TDIX as our companion tool. Remember, the TDIX is an amazing tool, but it's important to assert it's not a standalone tool. So I wouldn't recommend just trading primarily with TDIX. I mean, you can do that, but if you want to get the best results, it's best to pair it either with key levels, with Trend X, with Indicator X. Pairing it and using it as a companion tool will definitely help, because then you'll know when you're looking for the correct signal in the correct location. And this is important, because if you're looking at a sell signal, but it's not in the right location, there's chances it won't go in your direction. So over here, have a look here. Okay, so over here, look at this. You can see over here, we've got a red dot, and we've got basically, you can see we've got a super shark fin happening, and we've got price above the value line. So if we wanted more confirmation, this would have given us more confirmation in being able to understand exactly where would have been the best place to enter. And you can see exactly where that was over there. This would have probably been the best one out of all of these to enter. And then you can see another good one would have been over here, because you can see we've got a divergence. So remember, we're always looking for divergences, or we're looking for these super shark fins. I just want to quickly mute somebody's. Just remember to unmute mute yourselves, guys. And then the next one would have been here. Look, this would have been a fantastic one as well. If we wanted extra confirmation, we get a super shark fin happening, and we get that happening at this exact location. It's above the value line. We know we're in a downtrend because the imbalance on the higher time frame let us know that. And then we keep going over here, and you can see we got another one over here. We got a super shark fin happening. It happened pretty much over here. It happened over there, but that still would have been fantastic. And we move on, and look over here, we've got a divergence happening. So the key is to really become clear with how you see things. We've got all the little pieces of the puzzle that work perfectly. Now it's just about putting them together and understanding the right order of how they work and being able to interpret them correctly. So you can see here, look, we've got the divergence occurring, and then we've got this perfect, and it's all in alignment with this downtrend. So from this point over here, from this line over here, where we identified that it was the end of this round trip, then we're only looking for short positions. We will stay short, guys. We will not, I mean, you can if you want, but in this strategy I'm talking about is a trend trading strategy, and we want to trade in alignment with the trend. I'm sure you guys have heard the saying, the trend is your friend, and you want to trade in alignment with the trend. So this helps, because we're looking at these imbalances, and over here we got this bearish imbalance occur. The round trip started, and you can see we did not get a change until over here we got our first green dot. So then you can potentially close your trade, or at that point you're not looking for shorts again until you get another red dot. Over here would have been fantastic because we got to look at this confluence. We got a red dot happen here, and we're underneath the monthly pivot. So we know from this point we're only looking for short positions until we get a green dot. And now we got a green dot, guys. This green dot actually for Bitcoin, it actually happened. It actually happened 1 day ago. And you can see since we got this green dot, we got it over here. So usually when we get the dots, it happens at the close of the candle. Since we got the dot, Bitcoin has gone up 4%. And I'm pretty sure it's going to continue to rise, because if I go into a 2-day, so I'm going even onto a higher time frame just for more confirmation. Remember, the higher the time frame you're on, the more confirmed the data is, because it all happens on the higher time frame. So you can see, even if we come over here into a 2-day, you can see we got a green dot start here, which is a fantastic sign, guys. It could mean that now all of a sudden this bearish round trip, remember this round trip, I mean, this has been since the 7th of June. So it's basically just over a month of round trip. So over a month of downtrend, downtrend, downtrend. And now finally we got the new dot, the new imbalance occur on the higher time frame. So this possibly could be price going into a bullish new round trip starting. And I'm going to show you some more evidence I have of that. So if we come over here, if we want even more confirmation, so you can trade it exactly the way I've shown you, but if you want more confirmation, then we can use the TrendX weekly pivots, guys. The weekly pivots are fantastic for more confirmation. And if you can see, look how this backs up our thesis. So we have a certain idea, based on the information of our decision that we're going to take. And then we can use TrendX, for instance, for more confirmation, for more information to help us. And you can see from this point where this bearish round trip started at this line, you can see price has been underneath the weekly pivot. Look, it's underneath the pivot. It's underneath the pivot. The next week, it's underneath the pivots. See, the whole week, it's underneath this pivot. Then the next week, it's underneath the pivots. Then the following week after, it gets above, but it can't hold the pivot. It loses it. And then last week, we were stuck inside the pivot. Can you see? So if we look at this through multiple scenarios, multiple glasses, we can see we're in a downtrend, under the pivot, downtrend, downtrend, downtrend. And now we're in the grid. When price is stuck inside the pivot grid, guys, this means we're in more indecision. The market's in indecision. And now this week, we started price, look at that, we started price above the weekly pivot, which is a good sign. So this could be a true reversal, because it's the first time. Okay, look, over here we had it occur, but then it dropped down. But then we got this consolidation, we got this indecision. And when we get indecision in the market, it can show reversals are starting to happen. But now that we got this, guys, this gives me more confirmation now. Now that we got this green line, which is showing us, remember, on the higher time frame, it's showing us a round trip could be ending. The bearish round trip could be ending, and this could be the start of the bullish round trip that is starting. So you can see, when we can learn to interpret this information, it can really help us in understanding what is happening. I mean, a lot of traders would have been looking to catch the bottom. You can see this is the bottom. This is the complete bottom. And sure, you can learn to catch bottoms. And it does require a little bit more skill to do that because you're reversal trading. So what we could have done is, you could have looked for maybe a divergence on the higher time frame. There's many different ways. But if we want more confirmation, because no one really knows where there's going to be a bottom, we don't know. Oftentimes we could have thought this was a bottom. A lot of traders probably thought this was a bottom and they started going long, and then they got faked out and then they got liquidated. It's exactly what happened. You could have been made a mistake in thinking this is a bottom or thinking this was a bottom, but you would have been right here. But for more confirmation, instead of looking for bottoms, if you're not as skilled a trader as being able to do that, that is where we can use these imbalances, because these give us more confirmation now that all of a sudden you can see bearish, 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 bullish. You can see we got strong bullish candles stepping in. Now the demand is increasing into the market. So this can show us now when the new trend has started. So imbalances will let us know when new trends begin, and then we can ride those trends, as opposed to when we're looking for reversals and we're trying to catch the bottom, which are more risky and require more skill. And yes, you can definitely learn how to do it. But if you're a new trader, new beginner, and you just want to play it safe, then just trade. Trade with the trend. The trend is your friend. Let it be your friend and trade in alignment with it. So it's just important to notice these differences. But also you can see over here, there was quite a nice confirmation. We got these reversal candles. Can you see this hammer candle, this hammer candle? These were two reversals happening on very higher time frames, showing the price does not want to go lower than this. You can see these wicks. You can see here, these big wicks are forming. Price does not want to go lower than those. You can see none of these candles, price went lower than that, only got wicked. So it's showing that it's almost like an invisible wall that's over here. It's almost an invisible wall. And funny enough, it lines up with this fair value gap, guys. Can you see? This is actually a fair value gap happening over here. So round trips happen. They start at fair value gaps. They end at fair value gaps. And you can see it did not go. The liquidity, whenever you see these big wicks, there are signs of liquidity. So I always see it as like drinking liquidity, like an injection. Coming in here, it's filling up with liquidity, filling with liquidity. It's bringing in buyers. It's bringing in more demand into the market. And then all of a sudden we get these movements, and then we get another imbalance. This imbalance over here confirms that in fact there is an influx of buyers that just stepped into the market, because it created this candle separation. This candle separation is letting us know that there's an imbalance of price now. There's so much price stepped in that it moved the market so much, so big, that it created an imbalance in the price. So this is one of our strongest signs that can let us know that a new trend is starting or an old trend is ending. And we can trade becoming a safe trader. We can just learn to identify these imbalances and these shifts in trends, and then trade along with the trend. So if you're a surfer, you're looking for a wave, this is your wave. This would be your wave. Now you've seen the wave is coming. So now you're looking for your best entry to catch that wave. So it's an analogy I really love using is surfing, because I live near the ocean here, and the waves it's all about flow, and interpreting the flow of the market, interpreting the flow of water or the ocean. And then if you are a surfer, you are calculating that movement, that flow, and then you want to catch on and ride it or enter your trade at the right moment. It's all about timing as well. So sometimes you might have to wait for the perfect conditions to present themselves. But being able to notice these conditions when they occur and recognize them will help you tremendously in your decision making, because the entries are easy. Like, look here, the entries are easy. Once we identify what the flow is like, the entries become very easy. Like Indicator X makes it very easy. It wasn't hard. It wasn't difficult to understand that every time price was above this value line would be a potential entry. And using it in combination with TDIX, this over here, it's a very obvious entry. You're only looking for sells because we have this round trip beginning over here. And then you're only looking for sells when price is above value. So clearly price comes above value. If we want to add in some price action, you can see it's also hitting a supply zone over here. Price is tapping into a lower time frame supply or a 1 hour supply zone. It's above the value line. It's giving us the super shark fin, which is a very strong signal of a reversal that's going to occur. But remember, the effectiveness of the TDIX is going to be based on the conditions that are happening within the chart. So if the conditions in the chart are matching the criteria of the strategy, it will be more effective. So you can see the conditions are perfect here. Price is above the higher time frame value line. It's tapping into a supply zone over here. Plus, we're getting a confirmation of a super shark fin. All of these are giving us a strong signal that now we can look for our short position. We can enter our short position. And if you had entered over here, this would have been fantastic. I mean, there would have been virtually no drawdown, no drawdown. And that is what I love about Indicator X, because the entries that it gives you, once you understand the flow of the higher time frame, and then you interpret that correctly, when you enter on the lower time frame, your drawdown, if planned out perfectly and the timing is all good, your drawdown will be so minimal, such minimal drawdown, which means it will put the least amount of pressure on your pain body. You know, in trading, I've discussed this multiple times. We have pleasure and pain that we're dealing with as a trader. You know, pleasure is when we're in a winning trade and we feel good, we're seeing green on the chart, and pain is when we go into a loss and we want to exit it. So pain is what causes us to exit trades too early. When your trade goes into the negative, you start feeling this emotion of pain. You start feeling the negative feelings in your body, and then that makes you want to exit the trade. And oftentimes you can exit it too early to only find the trade moving in the direction that you anticipated it was going to move it. So these entries give you entry points at the lowest pain threshold points, which means there's the least amount of drawdown. And this is why I love Indicator X, because it's honestly, I haven't found a better tool for entries. It's incredible. Like if you just back test it and you have a look on your chart, you will be super, super amazed how it ties together. So then we would have got our next entry over here. And this is Bitcoin, guys. This was the last 7 weeks on Bitcoin. So we had 7 weeks of non-stop above the value line and entries to occur. Because remember, we were not going to change our bias until we got a signal of the next round trip starting over here, which was this line. So until this line, we understood that we were in a bearish trend. And you can see from here to here, we were in a bearish trend all the way down. So now it was just understanding that we are in a bearish trend. It's being able to identify you are in a bearish trend, and then being able to understand where's the best places to look for entry. Now, if I go into a lower time frame, I can get many, many more entries. So remember, the 1 hour over here is going to be, if we're looking for mini swings or swing trades, this would have been our entries. But if I wanted to go onto a lower time frame, I'm going to go into a lower time frame now and show you. So say now I go onto a 15-minute time frame. I like to enter on a 15 or a 5-minute over here. And then I'm going to show you the same process. I'm just going to mark out this exact point on the chart over here. So you can see on the 15-minute over there. Just so I can show you how this would have looked on a smaller time frame. Okay, I just want to speed this up. Okay, I've already marked it. No, I'll mark it over here. There we go. Okay, perfect. So I've marked this line here. Everything's the same. I'm going on to the lower time frame. The only difference over here now is I'm going to add the weekly trend X as well. Because remember, this just gives us a little bit more of a companion tool to help us have a little bit of a better look at what's going on and make good decisions. Okay, I'm on the 1 hour. So now I'm going to go into the 15-minute. So I'll just show you how many different entries we had. Remember, a lot of trading is all about just doing things in the right sequence, you know, understanding the right steps, understanding the process correctly, not missing any steps. And then once again, being able to look at the charts with clear eyes. Remember, guys, if you overtrade, you trade too much, it will inhibit your ability to see clearly, because every trader only has a certain amount of mental capital. Mental capital is your ability to focus clearly, to make good, rational decisions. And as soon as that mental capital gets used up, and you have to understand, different traders can go for 3 or 4 hours, other traders can only go for 1 hour. You have to understand what is your own mental capacity for your mental capital. How much mental capital do you have to direct towards a trade before it gets compromised? And remember, when it gets compromised, it inhibits your ability to see clearly. As a trader, if your ability to see clearly is inhibited, you will make bad trading decisions. And it can really, it's a matter of just making one silly mistake and then you get caught on the wrong side of the market. So it's very important to understand mental capital, not over trading, and just monitoring your mental capital, because your state management is one of the most important things as a trader. What state are you in when you trade? Are you in a relaxed state? Are you worried about things in your life when you trade? Are you stressed when you trade? Are you trading from a place of inspiration and peace? And there's many ways to cultivate a good state. A lot of the processes I like to use, like, for instance, I don't drink coffee before I trade. I don't even drink coffee at all, but I stopped drinking it because if I drank coffee before I trade, it made me emotionally compromised. It made me make wrong decisions because the coffee got me all believing, and it got me feeling so good that, like, even if I was in a bad trade, I was still feeling good because of the coffee rush, or lack of sleep would inhibit that. Something that helped me a lot is I started doing deep breathing. So I don't know if any of you do deep breathing exercise, but if you do like a 20 minutes of deep breathing before you trade, it will give you a very clear mind. You'll be able to see the chart very clearly. So these are the kind of things that enhance your mental capital, that fill up your cup. If you imagine mental capital is like a cup, and if it's empty, you have an empty cup, then you have to replenish it and fill it again. So we do certain exercise to fill your cup, and maybe a walk in nature, maybe just not looking at the charts for a few hours, maybe doing some exercise, deep breathing. Everyone's got to find their way to do it. So now we're on the 15 minutes, and you can see over here, I'm going to use a wonderful TDIX as our confirmation tool. So you can see over here, we were confirmed at this line. We were confirmed that this was the round trip, beginning or ending on the higher time frame. So from this point, we are only looking for shorts because it's confirmed, guys. We know at this point we got this big bearish imbalance that occurred, which was the signal to us that the higher time frame players have now switched sides, and now they want to move the market in the opposite direction. Remember, we're only working in probabilities because we don't really know what is happening. But we can, as analysts, remember, guys, we are technical analysts. Our job is to analyze the data and based on that, interpret it and make decisions of probability. And maybe 60 to 70%, our probabilities are going to be correct. And in the long run, that all adds up if we average it out into a winning trader consistently. So you can see at this point, we knew that potentially the market was going down. So we're only going to be looking for sells. You can see as well, we got a very narrow weekly grid, which is great, showing us that chances are that price is going to go into a big trend. And this is that time we got that massive drop off. So TrendX can give us clues as well as to what is going to happen in the market. Sometimes this is so interesting, guys. I have friends who are technical traders only, like me, and then I've got friends who are fundamental traders only. And then there's guys who are fundamental traders and technical traders. But what I've noticed, if there's fundamental news, that comes out, like what's happened with the President Trump, the shooting, or any black swan events that happen in the world, oftentimes, if you look at the technical analysis on the chart, it actually matches up before the black swan event occurred. You would have looked at it in your back testing, and you would have been like, oh, the chart was actually saying this was going to happen before it actually happened. So on one hand, it's like, what comes first, the technical analysis or the fundamentals? But it's an interesting concept to think about. So you can see over here, we're underneath the grid. We come up, this would have been our entry, guys. This would have been entry, because remember, at this point, we're only looking for sells because of this. Remember, the higher time frame rules, the higher time frame rules. And remember, we're using it, we're not using the per mod strategy now, we're using a mixture of strategies. So this is a little bit more advanced training, the Indicator X, and I still do recommend, if you're a beginner, just to start with Trend X and to master Trend X first. Otherwise, if you've got a little bit more skill or feeling adventurous and daring, then take on Indicator X. But I always advise the beginners to start with Trend X first, and then we can start Indicator X. But you can see over here, this would have been fantastic. Look here, we've got a shark fin happening, a super shark fin. We have all the signals in place. We're above the 15-minute value line, and then all of a sudden we get this drop, and then we get a supply zone that's created. So Gordon was asking me about these supply zones, and this question the other day. And a valid supply zone, guys, is one where it breaks multiple structures. Okay, so you can see over here, this is how we can understand when a supply zone, and this is just slightly off topic, but you can see this is a low point. Can you see this is a low, this is a low, this is a low, and then we get a big candle that breaks that low. When this occurs, this lets us know we're going to get a supply zone that's created. And there's no fixed place, but it's a zone. So we create a zone like this. And then when price usually comes back to this zone, that's where we can get a response. So you can see we had this big drop, fall down. Usually if we get a big drop like that, we don't want to enter a short position. We want to wait for either a pullback, because I mean, if you had missed this entering over here, I mean, you could have entered, you probably could have still entered here if you wanted to scalp trade, and you could have scalped it back to the value line. You can see price came back to value over there, or we could have waited, and then you can see we get the new phase in the market start. So remember, guys, whenever we get a contraction in the market, it's showing us that the market is going to enter into a new 3-phase cycle. And you can see how wonderful this is. Phase 1, contraction. Phase 2, we get the whipsaw. And then phase 3, we get the trend phase shooting up over here. And oftentimes the trend phase will go straight into a supply or demand zone. In this case, it hits a supply zone, and then it rejects off that supply zone, and then it goes back into a downtrend. So this could have been another place to look for an entry, because our best entries when using TrendX, because remember we're using TrendX as a companion tool, is going to be when we're close to the grid. So you can see we come to the grid, we hit the grid, we reject off the grid. Simultaneously, we're heading into a supply zone. So this would have been a wonderful place to actually look for an entry over here. If we look on the TDIX, you can see over here, we also get a super shark fin happening over here. So it also coincides with a wonderful place. You can see we're also above the value line over here. No one ever knows how high above the value line price is going to get. But remember, we're stacking our probabilities here. I've added multiple probabilities. I've added the probability of this higher time frame imbalance. I've added the probability of the trend X weekly pivots, and I've added the probability of the supply zone over here. So these were 3 different probabilities I stacked into concluding that this area was going to be a good place to enter, as well as using the TDIX over here for just an added confluence. Remember, it's just an added confluence. If I had to just use one on its own, it might not have given me as much conclusive evidence. Remember, you're like a detective. You're like looking in the market for evidence. Once you find enough evidence on an idea, that's when we can enter. And then you can see we move on. You can see we get a new cycle start. New contraction box. We can see price goes into expansion phase. So phase 2 expansion, you see, and then we go into like a mini trend. So guys, you'll see this happens all the time on the charts. Once you train your eyes to spot these, trend first phase, second phase, and third phase. But this would have been your entry over here. This would have been your entry. You can see on the TDIX over here, we've got a shark fin. That's a very nice shark fin over there. I mean, this could have probably been an entry as well over here if we looked, because you can see we got 2 shark fins. So both of these could have been. This wasn't as nice of a shark fin. I mean, it's still decent, but this is a good shark fin. So you can see if you get a jagged edge, like look at this one down here, this is a good shark fin. Good shark fins have jagged edges, like sharp, like a knife. So you'll kind of see like it'll shoot up and then it'll shoot down like a knife. Can you see? That's like a knife. That's like a knife. So immediately, if you just look, the best shark fins you're going to find, like, look, this is a great one as well. Look at that. It's like a knife, sharp. And let's see if we look on that. This was probably, okay, but we're not looking for longs. Remember, we're only looking for shorts. When you have confirmed your bias is short, when based on this trend following strategy, we want to only stick to shorts. I don't want to suddenly be like, oh my God, here's a bullish super shark fin. Let's go long. You know, some people will do that. Some people will be like, let's go short here, let's go long here. But as a disciplined trader and following the strategy, how I'm sharing today, you know, learning to trade with the trend and sticking to a one-sided bias, you know, one-sided bias will help you a lot, because then you're not shifting from like buys to sells, because that creates confusion. When you're suddenly looking for sells and then all of a sudden looking for buys, that can create a lot of confusion. But here you go. This would have been another great entry, looking for our short. Here we go, another one. So you can see if we miss that one, then we wait for another master pattern to form. Here you go. We got a contraction box forming. You know, this is phase one of the market cycle. You know, it's really important to understand these phases, because these phases can really give us clues. Because remember, we don't want to enter here. We want to wait. We want to wait for the cycle to play out. So we got phase one. We know contraction phase starting. We know what's going to come next when we get contraction phase. We know we're going into the expansion phase. And then you can see we get expansion. We get pricings whipsawing around value. Can you see? And then all of a sudden we go into the trend phase. I mean, you saw me mark it out so many times. I can't make this stuff up. You know, the chart is just showing us how we get this definitive pattern that likes to repeat itself based on these phases in the market. And when we get the timing of the higher time frame accurate, you know, with the understanding these round trip cycles, and we base it in accordance with our entries on these master patterns, it can really help in making good trading decisions. So you can see this would have been our entry. We had a few. We had a shark fin over here. We had a shark fin over here. And we had a shark fin over here. And remember, guys, sometimes if you're entering in the whipsaw phase like this, you had three entries. You had three entries. So there's different ways you can trade this. And this is what you have to learn as a trader. Some traders I know would have entered two positions or three positions. They enter a little bit here, a little bit there, and a little bit there, and then they catch the drop. Because we don't know which is going to be the best one to enter. We don't know. And sometimes price will go higher. So you can average your price out by doing multiple entries. Otherwise, you can just get one entry. It's up to you. You know, oftentimes when we are in a downtrend, I'll show you this. When we are in a downtrend and we get the stair stepping, so you'll see we call it stair stepping. You can see we got this value line up here, and then we got this value line over here. It's like one is lower than the other. This is showing us the stair stepping that's happening. When this happens, we don't get price. Usually price does not come higher. Usually, majority of the time, does not cut higher than the previous value line. Or it will come to that value line and it'll find resistance. So when we set stop losses, this is a good place to set a stop loss at the previous value line, because it's generally can be a safe location. You'll see over here as well. You can see in this example, it used it as resistance. You can see it hit resistance over there, hit the resistance, and then it dropped. So we can use it as resistance points and areas of where to set stop losses above those lines. So this would have been a fantastic place to enter the trade. You can see we catch the drop. Then we move over here. We get another one happening. So I'm just illustrating it. I know I'm going over the same thing, but you can see we got the same scenario playing over here. We got the master pattern form. Then we got expansion phase, shooting off. But we didn't really even get a good entry here. So you can see if we're using our shark fins for confirmation, this would have been the place when we got the super shark fin where we would have looked for our entry. And this would have been primarily here. And then we would have seen a divergence occur over here. And that could have given us more confirmation to our entry. You'll see, depending on your stop loss, say you'd entered over here. Let's see. Say you'd entered over here. And remember, guys, look. Remember, we're still underneath the trend X pivot, which is confirming for us. So if we'd entered over here, let's just say we'd entered this time frame, and we made our, let's just say we raised our stop losses like a few percent. You can see we would have caught this trade. We could have also re-entered at this point. Here you go. So look here, we keep going, we get another divergence. Remember, we're always looking for either shark fins or divergences. This divergence is over here, and this was the shark fin. So these could have been two places to also enter the trade. You can see the same thing playing out, guys. We got a new master pattern, prices above the value line. You're looking for our short positions. We're either looking for a divergence or we're looking for a super shark fin. I mean, look, guys, look how perfect these shark fins are. Look how jagged they are. Remember, I was telling you, we're looking for these jagged edges. Look at that, jagged edges, sharp. Those are the ones, those are going to be your best ones to look for. And then you can see that we get price drop again. Then price comes back up, taps into our pivot, finds resistance, drops again. And you can see this would have been our next entry. It'll just play over and over and over, guys. But I hope you got the gist of this strategy, and this was a light bulb training moment for you in this trading. Now I want to open up the floor to any questions that you might have. If there's any doubts, now's your time to bring it up and I can clear that up for you.
Hey, Seth, that's Tobias.
Tobias, how are you, my friend?
I'm good. It's really hot in Germany, but I'm really good. Thanks, man.
And it's so cold in my country right now.
Where are you, actually?
I'm in South Africa.
Oh, really? It's cold?
It's freezing. Yeah, it's freezing.
I can't believe it. Because my friend, he told me a few months ago it was ridiculous hot, like ridiculous.
No, it's like UK weather now. Now I know what you guys go through.
What I wanted to ask you this, I just
Yes.
saw the imbalance in new indicator. Do you also use it on Heikanashi candles? No.
You can use it on Heikanashi. Yeah, you can. The only thing is, when you're on Heikanashi candles, you can't see imbalances.
Yeah. Okay.
That's the only thing. But
you told me no engulfing candles on Heikanashi, right? Also not. No.
Yeah, Heikanashi is not good for finding candles. The only thing it's good for is understanding the trend. But you can use them together. Like for instance, I'll show you. I will add them together here to give you an idea. If we add the Heikanashi candles and then I take off, so you'll still be able to use them very well. Actually, you'll see. And then you can just trust. You can just trust the imbalance tool.
I see.
It's great because look here, look how great this works. I mean, look over here, we got the red dot here, and then look, we've got all these flat backs, and then a flat back. It shows you the start. And here, I think this is going to be a really game changer for everyone, just having this. Look here.
When is this online, this indicator? Is it already on TradingView? No.
It's not online yet. I'm doing just some minor changes to it. Should be ready in the next few days, like very close.
I see. So you still think, I mean, I told you I really want to scalp on 3-5 minute. What would be the lowest you would go on the high time frame for the buyers? Would it be, you would say, okay, lowest is 12 hours?
Yeah, you could do 12, definitely. I'd say look at the 12-hour. If you can trade in alignment with the 12, so say you look on the 12-hour. This is what I was saying earlier, is if you can somehow coincide the higher time frame. So like if you look at the 12-hour and say for instance, okay, look over here. Say for instance, over here we got a green dot. So say we got an imbalance here, a green imbalance. So we're looking for longs at this region right here. Okay. Then we go, say we go into the 4-hour to kind of get more confirmation. Then look here, the 4-hour gets confirmed over here.
I see.
You see, so we know this whole region is a 12-hour region of longs. But now we just want to confirm on the 4-hour. So we know at this point and this point are going to be the best on the 4-hour. So if I go back to the 12-hour, you're going to see this whole area is good for longs.
But when you go back,
I just want a little bit of confirmation, now I know, okay, I can start looking for longs here and I can start looking for longs here.
I see. And when you say like, okay, scalping, and you see after the line you made, that you have candles going down, and then you would not trade because, I mean, it's green still, right? The indicator,
yes.
But you would not trade because of the candles for scalping.
Sorry, say that again. Which candles are you referring to?
You know, after the line you made, after this,
yes.
when it's right. So this green, yes, and afterwards the candles go down like flat.
Yeah.
Yes, right. No, before.
Oh, yeah, yes, yes, yes. I
Yes,
understand that.
this one. You would not trade. I mean, it changed on the 4 hour right before, but you see this candle, so you would not do it because it's against, right?
Yeah, I mean, I wouldn't do it. If you want to be super safe, then I would trade in
Right.
alignments with a higher time frame. So if you wanted to do shorts, here would be your time for look to shorts. On the
Yes, yes,
12
yes.
hour, you can see we're going down over here. So
I
then
got it.
we'd go to the 4 hour, and you can
Hmm.
see this whole area would be great for shorting.
Yes. I see. I see. Okay, just one more question. There's about minor boxes. You told me once you would sometimes take them and do very tight stop loss for it. But today I had this, this coin where I wrote, and it was like it was a minor, and then it was going back, but everything was for long. So, would you ever go for minor boxes, or would you say, now I skip that? It's too tricky.
You can. You see, the thing is with the minor boxes, you're going to get a very good entry. You're going to get a
Mhm.
very, very good entry,
This
but
is the thing.
oftentimes it hasn't been confirmed. So
Uh-huh.
what was that trade this morning that we were looking at? I think
Uh,
you mentioned it to me.
BRET.
Right. Yes, yes, yes. I remember when you pointed it out to me, I looked at it immediately and I
Yes.
saw exactly what you were. That would have been a good entry, and
Right.
that was,
Yeah.
you can
Yeah.
see. Look, did you enter?
Yeah. I ended.
Great. See, look at that. That was a fantastic entry. And remember, that was a gray value line at the time. Where were you? It was a 3 minutes. I'm just going
Yes,
to your,
it was three
there you
minutes,
go.
right? Mm-hmm.
So at the time, this is what we saw.
It was
See,
great,
look,
right?
there you go. You see,
Uh-huh.
so if we had left it, then we would have missed the best entry because look, this was the best entry. It didn't get better.
Uh-huh. Right. But could be there a possibility that it goes through the demand zone and it just goes more down? I mean, the bias was
Yeah, it
yeah.
is possible. It is possible. But if you see over here, right? So this is a key level over here. This would have been like
Uh-huh.
support zone. Can you see?
Yeah, yes, I see
If
it.
if price had broken this support, then it would have invalidated the trade
Yeah,
anyways.
I see, I see.
And then
Okay, I got it.
you would have looked lower down for another entry.
Yes. And actually I checked trend scanner X before for a narrow grids. Also the grids is very narrow, I think, from the trend X
Yes,
on.
yes. No, no, this is a very good one. I'll put it on because I also
Yeah,
saw it. Look, it
got it.
was
I was
perfect. No, it's perfect, perfect. I mean, you can even see over here, this would have been another fantastic entry. Look at that.
uh-huh. Yes, right.
Fantastic entry.
Yes,
Perfect.
yes.
Under the grid.
Sometimes when it's so perfect, you think, this can't be a perfect again, actually, because you know what I mean. You're like, no.
Yeah.
It has to break, but it's just
Can it be that easy?
yes. It cannot be so easy, really. So, would you take a stop loss on this upper value line on this 3 minute one? You would say, I think it was going up actually. Yeah, yes, I was going until the value line. This
Where this one here?
no, the 3 minute on the top, on the top.
Over here.
For take profit. Yes.
Yeah, that would have been a good take profit
I
area. Very, very good
just
take profit area.
and it
You
was
can
going there. Yes.
you can see over here it hit the previous week's pivot. Can you see?
Yes, I see. Okay,
As it hit the pivot, I mean, look how perfect that was. As it hit the pivot, it
amazing.
found rejection and then dropped.
It's a pleasure for me to see always this how it works out, man. It's ridiculous, really. Oh, but
I
when
know.
you in it, you just mentioned in the game, when you in it, right? You are struggling with your demons, and then this and that, and then
I
there's the
know.
point when you lose the view on these things, you should stop, man. Then it's like then you
Yes,
see too
exactly.
much things, and you don't see it anymore, and then it's done. You know.
Exactly. And that's why when you see clearly, when you look at the market and there's no subjectivity, it's just purely objective, just purely based on the strategy and the rules. And with good mental capital, it becomes much
Yes.
easier to make good decisions.
But I have one question, Seth. So if I was going in this demand zone, right, in this trade, and then you always mentioned now that there are more entries. Sometimes like there's a divergence. So if you go soon in the trade, you always have to have an eye on this trade, right? Because you don't know if there's going a bit more down, and maybe there's
Yeah,
another
that's
trade.
true.
So this is the only thing. What always yeah, because you go in the trade, let's say at 8, then you have to look at 10, at 12. Hey, what's going on? This is the only thing, yeah, with scalping, right? Where you like, okay.
Are you still in this trade or did you exit?
Oh, no, I exited.
Okay,
At
good.
the upper value line.
Great. This value line here.
Yes, right. I was going.
Fantastic. That was a great trade. Well done.
Yes, it was like 3%, or very nice actually.
Very
So
nice. Yeah.
thank you very much, Tess.
Pleasure.
I have to go and have a good time, and we see us next week. Yeah.
Yeah. Keep in touch. See you
Yes,
later.
yes.
Bye.
Thank you, man. Bye.
All right. Who else has got a question? Alex?
Yeah.
You have a question?
Hi, Seth. Thank you. By the way, I love the surfer analogies, being a surfer myself. So,
Awesome.
which waves are you near?
In Cape Town here, we've got the Atlantic, the Pacific Ocean. We've got two different oceans here. So near Llandudno, I live near some great waves, and Muizenberg, we've got great waves. We've also got big wave surfing here. So it's quite a big surfing area where I'm from.
Cool. So I'm still pretty new with Indicator X, and I'm probably my question really like, what settings are you using when you're when you're starting to go through this on the higher time frames with Indicator X to sort of get your value lines, et cetera, et cetera?
On the higher time frame, okay, when I'm on the higher time frame, I'm basically only using the multi-bar master pattern and the major master pattern. So I'm just keeping this simple because a lot of people are getting confused. And then the setting I'm going to use on the higher time frame is a 2 and a 2 on the contraction swing size.
Hold on, where's the 2 and the 2 on the contraction swing? So that's what you use to and you turn everything else off.
Yeah, everything else is off. That's the only thing I've got selected here is the mod. There's a lot more to this, but I want people to get a better understanding first before we start adding all the other little components together. But for now, it's just multi-bar master pattern, the major master patterns turned on, and then the contraction 2 and 2.
Got it. And so you would go on to that first on your high time frame, do all your lines, and then from there you'd go into trend X, et cetera, correct?
Yes, exactly. So like I kind of use them together. So like, for instance, with this one that I've got here, this is on a 3-minute chart, but it's perfect because we've got the weekly trend X showing, and then we've got the smaller pivots, and you can actually overlay them as well, as long as you keep your chart quite clean, you know.
Okay. And do you change your colors on those as well too, so they show red and green, or do they automatically come up that way? Mine are showing gray.
They automatically, there's 3 different colors you can select. So you can see the minor bars are gray, the majors are red, and then the origins are green. So these are just color coded depending on how many times prices cross them. So you'll see if I turn on the grays are basically where price is broken only to one side and not two. Then the reds is where price is actually crossed above the value line at least one time. You can see crosses the value line. And then the green is when it's crossed more than 2 times. So you can only have the greens on, and these are highly confirmed because it means price is crossed multiple times. You can see around the value here.
Got it. So you'll just keep the origin master pattern box on and shut the other ones off. Is that what I'm understanding?
Yes, you can do that. You can do that as well. You can do, but the thing is, the origins won't give you as many options. So you'll see if I turn off the majors, you can see we've only got two over here. But if I turn on the majors back on, you'll see we'll have more options. Will be this and this. You see, so origins are going to give you more confirmation, but the majors are going to give you more options.
Got it.
So that's my conclusion, was to just keep on the majors for now until, I mean, I love using the origins, but I just didn't want to confuse people, the beginners, you know?
Got it. Cool. Thank you.
Yeah, absolute pleasure. Enjoy your surfing. Anyone else with a question? I see someone's got their hand up. Yes, how's it going?
Sorry,
hello?
microphone. So, hi, it's Jackie here.
Hi, Jackie.
Hi, how you doing?
Great, and yourself?
I'm very well, thank you. I think my question is, I'm also new to using this indicator X, I actually find it a lot more aligned to myself than the trend X.
Okay.
Yes.
Fantastic.
Self-ridge? Yes. Automatic, no.
Oh,
Automatic.
sorry. Guys, mute yourselves. Okay, there, I muted him. It's all good.
Okay.
Carry on, Jackie.
What I'm finding, what I'm a bit confused though, when, using TDIX as a companion. So
Yes.
when you sort of like at the entry point, obviously, and correct me, actually direct me if there's another recording somewhere which kind of covers this, because I went through the live sessions and I didn't see anyone in particular for not Trend X, TDIX. What I wanted to
Yes.
find is what's the optimal entries? I can see that obviously there's dots. There's also buy and sell, where also you have shark fin, super shark fin.
Yes.
What is what? That's
Okay,
what I'm
let me
confused
show you.
about.
Let me show you now. So the best ones to look for when entering with indicator X is we're either going to look for shark fins. Shark fins are basically where you can see where you've got the white line and it breaks outside of the blue and then it breaks back in. So this is a shark fin. This is a shark fin over here. This is a shark fin. And these are going to show high reversal levels. And these are what we're going to use in combination with price above value line. So you can see here, price is above value line. We got a shark fin. So this would have been the entry. Then over here, price was only a little bit above value line. It still could have been a little entry. You see, we get the shark fin. And then over here, we got a super shark fin over here. So whether it's a shark fin or a super shark fin, it still acts as a good confluence or confirmation. And this would have been the other indicator here. So we can also use divergences. So we use divergences in the same way. Let's see if I can find a divergence. Here you go. So you can see here's a divergence over here, and the divergence would have been around this level over here. So you can use either divergences or shark fins or super shark fins when trading with your entries with indicator X.
So this TDIX, is it like a Bollinger Band as well?
Yes, yes. It's a Bollinger Band and an RSI and an EMA all together.
All together. So which is the top part is the overbought, and then the bottom oversold. Is that what it is?
Yes, yes,
and what
that's
about
right.
the money flow ones?
Yeah, the money flow over here, this is the money flow. I've got it turned off at the moment, but if we turn it on, there's the money flow. The money flow can also help you find divergences. So like you
I
can...
put that on mine, so that confused me, as in, what am I looking for when I see that? Yeah.
Yeah, you see that there's a lot of different things to look at. That's also one of the reasons why I turned off the money flow, because you don't need to keep all the components on,
Okay.
some people like more than others. So like you can either use money flow divergences or you can just use RSI divergences. They're all valid. And but to keep things simple, you don't have to have it all on, especially because it can create confusion if you like, oh, but the money flow is not showing a divergence, but it's showing a divergence here. Which one is right?
So, but the main entries is around where the price hits the Bollinger Band.
Yes,
And,
yes.
on
Especially
dot,
you can see these are the shark fin. This is a good shark fin over here. Can you see?
Yeah.
Because it's sharp. What we want to see is we want to see like a very sharp V piercing out through the Bollinger Band, because that's showing us that there's this reversal that's going to happen. When it happens, when we get these dots, so the dot shows us that the reversal, the shark fin is actually happening in an overbought or oversold region. So these dots, in fact, can be a stronger signal because it's a shark fin in an oversold or overbought.
Okay. And just back to the indicator X itself. When we have a reversal, what kind of things do we look at? Is that the candle where we have like a candle? Forget about TDIX for now, but just when you're looking at the price action itself, is it you kind of just an indicator X? What gives me an indication that the trend is about to reverse here? Is it just a candle?
Okay, so what we're going to do is, this is where we need to use either another indicator, because remember, we want to trade. Are you talking about catching a reversal?
Yeah, or knowing when the trend is literally coming to an end. It's just to avoid caught up.
So what we use is it's actually a new indicator that I've created very recently, but I'll show you the methodology. So you don't even need the indicator to actually work it out. I just have to put my bigger candles on here. So in the beginning, I don't know if you missed the beginning of this training, but I was talking about round trip cycles that happen within a price, you know, from moving from buyers to sellers or sellers to buyers.
Yeah.
And I'm going to go to Bitcoin because Bitcoin was a very nice chart for me to show you. You'll see over here. So here we go. This is it perfectly. So you can see over here, this is what's going to show us when the trend is actually shifting. We're going to be looking for imbalances. I'm not sure if you know what an imbalance is, but it's when we get this.
I know that. I know that. Yes. Yes.
Perfect. So then we're looking for imbalances. So on a higher time frame specifically, so you can see on a 1 day we get a bullish imbalance, and that is showing us that a new bullish trend is starting. Then we get a bearish imbalance, and that is showing us that it's the end of a round trip, which was the bullish trend, and it's the start of a bearish trend. So we can use higher time frame imbalances to calculate when new trends are beginning or trends are ending.
Okay. So this one will be made available at some point.
Yeah, it'll be made available in the next few days.
Okay, wonderful. Thank you. I think obviously I was kind of asking because we didn't have this indicator before.
Yes. No, it's very, very new. I've just developed it the last few days. Actually, the last 2 weeks I've been working on it, but it's almost just been completed.
I've actually been using the ATR, and I don't know now the kind of similar, or the VWAP. I started looking at the VWAP as well.
Yes. Yes, you can use the VWAP as well. You can use the VWAP. It's also a great tool. You can also use the ATR. It's also fantastic. So very good. You can see, just understanding, especially on the higher time frame. So what you want to do is you always want to go into the higher time frame first and find out what is the trend direction. So right now I'm on the ATR on the daily, and you can see we're under the red line. So, and in this whole area, I'm only going to be looking for short entries on the lower time frame with indicator X. You know, so we're just trying to blot out, and then we get a green dot start over here. So from here, I'm going to stop, and I'm only going to look for long entries again, you know.
So once this is available, then that means we don't have to rely on ATR.
No, you don't have to. You definitely don't have to when it's well.
I mean,
these are great. These are great tools as well. But you know, there's been advancements, and I've found out that, you know, through back testing and also just learning from very good traders, that imbalances are price action indicators, you know, so they're giving you definitive information what's happening in price, whereas the ATR, for instance, is not 100% price action based. So it can also, you know, the information might not be 100% as accurate. So it's just, as we advance with our knowledge and our tools, we want to bring you guys better tools to use as well.
Wonderful. Thank you very much for that.
Absolute pleasure.
Hi, Seth.
Well, I had a question.
Who was first? Gordon.
Hi,
Gordon's
okay.
Gordon's the elder.
Do you want to take the other call? I don't mind taking the other call if you want to take the other person.
Yeah, mine is just a quick one.
Okay, perfect. Let's go.
I mean, I joined a bit late, so but I just sort of heard you talking about the new indicator that you've created. So this is a price action concept, yeah?
Yes, that's right. It's a pure price action based indicator, similar to the TDIX and indicator X, and I think it's going to help a lot in being able to understand the trend direction.
Right. Okay. And you said you've done extensive back testing on this one as well. I've
done so much back testing, but also it's just the methodology, you know, like I've also got, you know, I get mentored by very good traders as well. And we're learning a lot about round trips and how imbalances can determine round trip movements, you know, from a buyer's trend to a seller's trend. And yeah, I think it's going to be a great additional confluence to use just to give more confirmation, you know, and certainty.
Okay, so I mean, so when I joined, I believe I saw it in demo. You demoed it a bit earlier, or was
yes, I think it was last week or the week before.
Okay, 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 grand. All right, well, and when would it be ready?
It should be ready this week. I've just been doing final little edits and tweaks just on the precision, because tracking quality imbalances, it took a little bit while for the coder to get that right, but it should be ready in the next few days. I'm actually waiting for the final. This is the previous version, and the new version should be coming very soon, and which will be the final version. So I'm hoping this week, holding thumbs.
Right. Okay, grand. Okay, that's great stuff. Now, lastly, Seth, I recently had an offer from TradingView to
Yes.
upgrade my TradingView on a different email address. So I don't
Yes.
know, after the call, if you can check your messages. I sent you my new TradingView account, so you can associate the indicators with it for me.
Perfect.
Yeah.
It's super easy. All you do is go back into WAP and reclaim them with the new address.
Bad
but
boy.
I'll give,
Yes, I remember. Yeah.
super
Okay.
super easy. But let us know if you find difficulty, and we'll give you more guidance.
All right. Thank you.
Pleasure.
All right. Cheers.
I have a question, Roy. Can you guys hear
How's it,
me?
Roy? I think anyways, go. It's fine.
Okay, shall I give you my question?
Yes.
Can you
Yes, why
review
not?
your
That's what you're here for, isn't it?
okay? Can you review your TDI?
Roy, you're muted. Roy, you're
Sorry,
muted.
Roy. I don't know what
Okay,
happened.
how's that?
Oh yeah, that's good. Sorry, Roy. Say that again.
Can you review your TDI settings for me, please?
The TDI. Okay,
Yes.
Here we go. So the only settings, the nice thing about this is there's not too many settings. But on my version, I only have the shark fins and the super shark fins ticked on. And then I have the money flow and the color candles ticked off, just because that's the preference I like. And everything else is standard. Everything else is standard.
Taking pictures as you scroll. So if you'll scroll on down, I'm taking pictures. Okay. Just want to verify. Thank you very much.
Perfect. Awesome.
Hello. Hello.
Yes.
Yeah. Hi.
Hello.
Can you hear me? Oh,
yes,
hello.
I can hear you.
So yeah, just a quick question. So to get the shark fins, yeah, you just get Bollinger and add your TDI, is it?
To get the shark fins, yeah. Sorry, I'm not too sure your question. Are you saying how to identify them?
Yeah. How do I get that on my platform? Is it just
have you got
going to indicators, get Bollinger, and then add TDI? Is it?
All you do is you go over here to indicators at the top here.
Yeah.
You go to invites only, and then you select the TDIX. It's this one over here.
Yeah, I've joined about a week ago. I've already got all the invitations.
Okay. Yeah, so it should all be there. If you open the indicator, it should be there. You don't have, there's no setting that you have to put on.
Okay. Thanks, Seth.
Yeah, absolute pleasure.
Thank you.
Okay, Gordon, I think it's your turn now.
No worries. Thanks, Seth.
Sorry about that. Thanks for being patient.
No worries. Seth, yeah, go ahead.
I'm very well, thank you. Hi.
Kidding, mate. Go for it.
Okay, so the question two small questions. One is there going to be an alert on this new indicator? Because that would be a game changer as well.
Yes, 100%. Yeah, there'll be alert. It actually has alert right now. It's working. The alert is working, so it's great.
Perfect. The second question was on that supply zone. The only it maybe just be a pedantic point. So just give me 5 seconds on. I thought the supply zone was like the top, but you seem to have gone slightly lower down to a consolidation section. Do you remember my question in the chat?
Yes, I do. Do you remember what coin that was? Okay, no, it'll probably be.
I think you were looking at it just now. And Bitcoin, was it not Bitcoin just now? You were looking at you were looking at some consolidation, some
Hold
supply
on, let me
zones.
see if I can find that. let me see if I can find one. I think I was on the 1 hour. Let's see if I can find that again. I think it's somewhere here. I'll explain to you exactly the difference now.
Because I thought it was
here
the peak. I thought it was the peak where it turns was a
You see
supply
the-
zone, but you went slightly lower.
Yeah, you'll see. So the supply zone, right? The peak is the liquidity
On the
level.
right, just on the right there in July, just where your indicator X on the last in. Oops, it just moved
Yeah.
it. No, it was just in July where you
I think he's got to the right. You need to go to the right.
Yeah.
Let me see if I can just identify it because it
There's
looked.
so many of them. I'm getting so
There's so
confused.
many of them. Yeah, it was just where
But
you
the-
were just now.
Yeah,
Anyway, yeah,
here's
go
a good
ahead.
explanation here. So, okay, so this would actually be the supply zone here. Can you see?
Why
Not
not?
really
Why not the top where it pivots?
I'll show you why, because this is actually the liquidity. So the top is the liquidity.
Ah, okay.
You see, so for me, a valid supply zone is when we get a break in structure. So at this point, no structures were broken. Can you see? This would be all the structures at the bottom here. These would be all the structures. Can you see?
Okay.
You see, so at this point, none of those are broken. They only broke over here. Can you see? They only broke over here.
Yeah.
So where they broke, I'm going to basically track the previous doji candles. Can you see this consolidation area here? It's the consolidation just before we got these breaks in structures. And it's usually followed. So a real supply zone is usually followed by big momentum candles. Can you see this big candle over here?
Yes.
You see, so that candle lets me know that that's the valid supply zone. So then I track back up and that's the supply zone, where this at the top here is the liquidity line. But they can be used in very similar ways, you know?
No, just being, but so thank you for that. That explains it perfectly. Thank you.
Pleasure.
Thanks for bringing this new tool to us as well. Really good one.
Of course. I've been working on it day and night.
It all
It's like,
helps.
so excited to
helps,
share it
yeah.
with you guys.
You, man.
All right. Any more amazing questions?
Just a random one, please. Is this going to be
Yep.
part of the membership, or is this an additional, or is there?
No, it's part of the membership. Yeah, it's part of the membership. You'll all just get free access to it if you're a member.
Oh, cool. Thank you.
Of course.
I have a question.
Yes. Hi, Roy.
Going back to the TDI settings, what's the importance of the wave setting? That's what I can't figure out. What does the wave do for me? You said you don't check it, and I've got it checked. I'm trying to figure out if I should just keep it.
Are you saying the money flow, the
money
wave?
Flow wave? Yes.
Okay, I'll show you. The money flow wave can also just help you understand if there's a lot of buyers in the market or sellers in the market. I'll show you.
Mm-hmm.
Sometimes there's a lot going on, you see. So that's the reason why I uncheck it. So like if I take off, for instance, to show you in a very clear way to see what's going on. Okay, I'm going to take off the Bollinger Band. I'm just going to leave the money flow, and I've tried this with only the money flow on, and it's actually quite amazing. So I'll show you how much better it is to see. So now that we've got just the money flow on, let me take off. I'm just going to take this off to make it super easy to see.
Okay.
I want to just focus on money flow for you now and take off. Here we go. That's what I want to take off. Okay. So you can see over here. Oh, so I just want to remove these over here, overbought, oversold. Just want to make this really nice and clear to understand. There we go. Okay, you go. So you can see now we've got the money flow over here. So the money flow can let us know when we've got more buyers. You can see when we've got big amounts of green, we've got more buyers in the market. When we've got big amounts of red, we've got more sellers in the market. So it can show us when there's buyers and sellers in the market. But what I like to use it for is these divergences. Can you see over here, we've got a lot of sellers, but then all of a sudden we have less sellers and then even less sellers. So this is showing us now that there's less and less sellers in the market. Then all of a sudden, like if we go to the chart, I'll show you how this coincides with the chart. So I'm on the 1 hour. So you can see if I draw from here to here, it's showing us there's less and less sellers in the market and more buyers are stepping in. So eventually there's going to be a tipping point. So a money flow divergence is showing us when there's going to be a reversal in the market from one direction to the other. Can you see? You can see it over here. It's getting less.
Yep.
It's getting less sellers and then even less sellers. So when there's less and less sellers in the market, we know that what's going to come next is a large influx of buyers or more demand in the market. So we can use money flow divergences or just give us an understanding on how to interpret when we get these reversals in the market that are happening.
And would you stick with the, yeah, it does. Would you stick with the chart time frame or would you go to 1 hour in your settings?
I would just stick to the chart time frame.
Okay.
Unless you want to be like if you want to be entering on a 15-minute and then you want to see what the money flow is on a 1 hour, but I think to keep it simple, just stick to a chart time frame for now. It's really good.
Well, if I'm scalping, I want to enter on the 5 minute. So would I set it up for the 5 minute?
You can set it up for the 5 minute, but the first thing you want to do is you just want to notice it on the higher time frame as well, because it'll give you more confidence. So for instance, if we noticed this on the higher time frame and then I went to a 5 minute and I went to look for it on a 5 minute, because remember a 5 minutes money flow is going to not be like, it's going to be a lot of turbulence because it's just showing a lot of buyers and sells. That's why, I mean, you can see over here, like, here's a good example. For instance, I'll show you on the 5 minute. We got a very clear divergence happening. You can see, look, money flow is getting, can you see, getting less and less and less and less. And then we get this little spike over here, which is like a buyer. So if we wanted to scalp, this would have been great. You can see, look here, you can see perfectly. I'll mark it out on the chart where the money flow was. Here you go. So it was basically from here was the divergence all the way down to here. So you can see price is going down, money flow is going up, and then we get this big movement over here, which is showing that little spike of demand or buyers stepping into the market. So this would be a perfect example of how we can scalp with it. But it's always good to confirm it on the higher time frame, and then come and look for entries that are in alignment as well.
So I can confirm on a chart, then switch to the 5 minute.
Yes, and then look for your entries, because these are great for entries, actually. Like I have a friend who just enters on the money flow, that he only uses money flow and he only looks for divergences on the money flow. Like you can see over here, we've got divergence. Can you see price is going down over here? But then over here, we've got a money flow that's moving in this direction. Look here. So at this point over here, you can see, look, it goes lower, then lower, then lower. At this point becomes the trigger, because it's showing that there's so little of the sellers left in the market. And then look, the trigger becomes on the chart over here, and then we get a big bullish movement directly after that.
Very good. Thank you.
So
thank you very much.
It's a very good tool. It's very helpful. Money flow divergence is great. Good question. Thank you for asking.
Okay.
All right, guys, is there any more questions? Otherwise, I think we're going to call that a day.
You, Seth.
More questions?
Thanks very much.
Fantastic. Yeah, guys, thank you so much for tuning in. Really appreciate it. And I hope you got a lot of value from this lesson. And we will keep the training going. Remember, in the group, Power Friend will continue in the group. I think there'll be more hangouts and chat further if you want to keep things going. Otherwise, have a wonderful day or evening or wherever you are. And we will chat soon. Take care and all
also,
the best.
Thank you. That was very educational.
Seth, hang on.
Seth. Take
I
care,
would like
Seth.
to congratulate and welcome Gordon and Grandpa Roy as our new community mentors. I officially dropped the announcement. Do us a favor, guys. Go in there, give us some reactions, give them a warm welcome.
Welcome,
So
guys. Love it.
Yay.
Thanks, guys.
Welcome, Grandpa.
Seth, if you're
Love
still
having
here,
you guys. Thank you so much. Appreciate you guys.
Thank you for the continuing work.
Pleasure.
Thank you
We're a
so
team.
much,
We're a
Seth.
team.
Thank you.
All the
See you in
best,
the chat.
Hitch. Cheers, guys. Take care.
Cheers.
Bye.
See you, Seth.
Thank you.
Bye.